Hello and welcome subscribers to the Saturday Summary for February 8th, 2014, your weekly summary of market and economic news for annuity and life insurance professionals. I'm Jonathan Illig for The Biz. Now be sure and click on the subscribe button to have both this video overview and the written summary delivered to your inbox and receive our special offers. Let's start off this week with a quick review of what's happened this week. Volatility's back. After starting the week with a loss of over 2%, on Thursday and Friday the markets rallied, with the S&P 500 index closing the week with a gain of about 0.80%. Now Thursday and Friday's rally saw the S&P gain 2.5%, the gain over 2 as well, and the NASDAQ Composite over those 2 days posted about a 2.8% two-day gain. However, these gains are not enough to bring any of these broad indexes into positive territory for 2014. With the S&P 500 still down almost 3%, the Dow down nearly 4.75% for the year, and the NASDAQ getting close to even with a year-to-date loss of 1.21%. What's this mean? Essentially, the markets have remained flat so far this year with no big breakout gains and no big losses. Now we're 6 weeks into this flat pattern. Does this indicate a top? Well, going into a real correction, analysts are mixed with the exception of the perennial bulls. Now of interest on Friday was that the website MarketWatch conducted a flash poll of readers right after the markets closed and posed the question, some analysts think the stock market correction is over. What do you think? Well, about 1,500 readers, all of whom you can assume are either traders or some type of financial pros, responded as follows. 32% said yes, stocks are ready to climb. 45% said no, this is a dead cat bounce, and 23% remained neutral. Again, not scientific, just the people on the site, but was interesting. By the way, if you're not familiar with the term dead cat bounce, it refers to markets going up when the overall trend is downward, and it comes from a colloquialism that says even a dead cat will bounce once or twice as it hits the ground. Now, we're going to devote a lot of space in this week's summary to an article written by Lance Roberts of STA Wealth Management, in which he puts the current market downturn into perspective. Now, looking at this chart, he writes, first of all, I have written multiple articles discussing the excessive extensions in the markets and that a correction of some magnitude was likely to occur this year. However, the correction to date is not one of magnitude, and yet it's rather buying dip within the ongoing uptrend. Now, after an increase of nearly 30% in the markets in 2013, of which I have suggested numerous times that one should consider taking some profits, it hardly seems alarming that the market should experience at least some sort of mild correction. So at this point, will you please put your head back in the moving vehicle? Now, Mr. Roberts' point here is that while he believes a significant correction is due, this is not it yet. Now be glad, because there's still time for clients to take some of their gains to the safety of indexed annuity and life contracts before the big correction actually hits. Now of real interest in Mr. Lance Roberts' article is his observation about Wall Street versus the retail investor, in which he states, not surprisingly, you are at the bottom of the list. The incestuous relationship between companies, institutional clients, and Wall Street are the cause of the ongoing problems within the financial system. It is a closed loop that is portrayed to be fair and functional system. However, in reality, it has become a money grab that has corrupted not only the system, but the regulatory agencies that are supposed to oversee it. Well, no surprises in that last statement. As I often tell retail investors, the markets aren't a problem. They simply are what they are. They are auction markets that go up, down, and sideways based upon emotion events and moves by big players that you don't control. You're along for the ride, good or bad, and it's up to you to protect yourself because you don't count to the big institutional traders that control the markets. By the way, Wall Street calls you the dumb money. So, anyway, moving on, as always, some quotes to share with clients. This first one up from David Gartman. David Gartman's the editor and publisher of the Gartman Letter, an investment letter, who on February 3rd said in an interview on CNBC, I just think you're going to have a very severe, very substantial, and really quite ugly correction that will probably make a lot of people wail and gnash their teeth before it's done. Neutrality is the best you can have at this point. I think that the right place to be, on the sidelines. I hate to call it panic, but it has some distance to the downside. As Dougie Cass says, risk happens fast. By the way, that article from Doug Cass is on page 4 of today's summary. Now our next quote is from financial author Doug Casey. And he says, now is a very good time to start thinking financially, because I'm afraid that this year, in 2014, we're going to go back into the financial hurricane. We've been in the eye of the storm since 2009, but now we're going to go back onto the trailing edge of the storm, and it's going to be much longer lasting and much worse and much different than what we had in 2008 and 2009. Boy, I hope that's not the case, but you know, we bring our retired and soon to be retired clients these forewarnings so they can take action to protect themselves, protect their savings. And I think Casey's analogy of having been in the eye of a hurricane is very apropos. Okay, I'm running out of time. Be sure and read the summary, as there are several great articles forecasting a downturn in the markets to share with our clients. Here's that article from Doug Cass. Next up, we have a warning from Goldman Sachs about emerging market slowdown, and our perennial bear Mark Faber is warning about a vicious cycle to the downside. Now, if you want to see something covered in this summary or have comments, contact me at the email address that's scrolling along the bottom of your video player there. Now, that's your summary for Saturday, February 8th, 2014. Great weekend to everybody. To become a subscriber and have this Saturday summary, both the video and the written version, plus all special offers delivered directly to your inbox, click on the subscribe button next to this video. Thanks for joining us. We'll see you next Saturday.